How can digital assets bank the unbanked globally? Imagine a world where everyone has access to financial services, no matter where they live or how much money they have. That's the promise digital assets hold for millions of people who are currently unbanked. Many individuals around the globe lack access to traditional banks because of high fees, minimum balance requirements, or simply because there are no bank branches nearby. In some countries, governments or banks requiring a lot of paperwork or identification, which many people don't have. This leaves a big chunk of the population without a safe way to save, send, or receive money. Digital assets like cryptocurrencies can change this by offering a new way to handle money. All you need is a smartphone and internet access. Instead of relying on a bank, people can create a digital wallet that stores their digital assets. These wallets are easy to set up and don't requiring a lot of personal information. With digital assets, people can send money directly to others across borders in minutes, not days. This makes remittances cheaper and faster than traditional wire transfers, which often charge high fees and take several days to arrive. In countries with unstable currencies or high inflation, digital assets like Bitcoin or stablecoins can act as a safe haven. Instead of holding local currency that might lose value quickly, people can store their wealth in digital assets that hold their value better. This helps protect their savings from devaluation. Digital assets also open up access to global markets, so people can buy goods or services from other countries without needing a bank account or credit card. The infrastructure needed for digital assets is much simpler than traditional banking. All that's required is a device with internet and a digital wallet. This is especially helpful in rural areas or places with limited banking infrastructure. Mobile internet is growing fast in many developing countries, making it easier for people to connect and use digital assets. However, there are challenges. Price volatility and regulatory uncertainty can make some people hesitant to use cryptocurrencies. Merchant acceptance is still growing, so paying for goods and services with digital assets isn't always easy. Stablecoins could help reduce volatility, but they still depend on the existing infrastructure and regulation. For digital assets to truly serve the unbanked, more merchants need to accept them, and governments should create clear rules to protect users. Education about how to safely use digital assets is also important. As more people learn and trust these new tools, digital assets could become a real alternative to traditional banking for millions around the world. This shift could help bridge the gap and bring financial services to those who need them most.